You ever notice how the flashy businesses get all the attention? Tech startups, crypto coins, AI tools, the next big thing. Meanwhile, the guy who owns 3 laundromats in a boring strip mall is quietly making $300,000 a year and sleeping just fine at night. And you're over here refreshing your brokerage account wondering why your high-growth stock is down 37%. That disconnect? That's not an accident. My name is Wesley, and I spend way too much time thinking about long-term wealth building and why most people overcomplicate it. If you're someone who feels like investing is confusing, risky, or stacked against you, make sure to hit the subscribe button and give this video a thumbs up if this helps you out. Because today we're talking about something that sounds, well, boring. 6 boring businesses with unfair long-term advantages. And here's the thing, boring is often where the money is. Most people assume exciting equals profitable, but historically, that's not how it works. According to research from Professor Hendrik Bessembinder, just 4% of publicly traded companies account for nearly all long-term stock market gains. That means most exciting companies don't create lasting wealth. Meanwhile, stable, predictable businesses with steady cash flow quietly compound for decades. Here's what most people don't realize. Wealth isn't built on excitement, it's built on durability. So let's break down 6 businesses that have what I call unfair advantages. 1. Waste management. Trash. Literally garbage. Now you might be thinking, Wesley, we're starting with trash? Yes, because trash doesn't care about recessions. Whether the economy is booming or collapsing, people produce waste. In fact, the World Bank estimates global waste will increase by 70% by 2050. Here's the math. If a waste company services 10,000 households at $30 per month, that's $300,000 per month in recurring revenue. That's $3.6 million a year before commercial contracts. And here's the unfair advantage. High regulation, massive infrastructure costs, long-term municipal contracts. Once they're in, competitors can't just disrupt them. This is where it gets really interesting. It's not glamorous, but it's predictable, and predictable cash flow is what investors pay for. 2. Self-storage facilities. Look around your house. How much stuff do you own that you don't actually use? Exactly. Americans rent over 50,000 self-storage facilities nationwide. That's more than McDonald's, Starbucks, and Subway combined. Here's the psychology. People don't like getting rid of things, but they also don't want clutter. So they pay $100 to $250 per month to store items they haven't touched in years. Let's say you own a facility with 500 units averaging $150 per month. That's $75,000 per month, $900,000 a year. And the operational complexity? Low. Minimal staff, low inventory, tenants move themselves. Here's what most people don't realize. Self-storage thrives during both growth and downturns. Boom times, people buy more stuff. Recessions, people downsize and store stuff. It's anti-fragile. 3. Pest control services. Nobody wakes up excited to pay for pest control, but when there are termites in the walls, suddenly it's urgent. The U.S. pest control industry generates over $20 billion annually. And here's the advantage. Recurring service contracts, quarterly visits, annual renewals, sticky customers. If 1,000 customers pay $40 per month, that's $40,000 monthly recurring revenue. And once trust is built, switching costs are high. People don't gamble with termites. Look, boring, uncomfortable problems create reliable income. 4. Accounting firms. Accounting. Not exactly viral content, but every business needs bookkeeping. Every individual files taxes, and tax codes get more complicated every year. The IRS processed over 160 million tax returns last year. Even if a small accounting firm handles 800 clients at $400 per return, that's $320,000 during tax season alone. And many move clients onto monthly retainers for payroll, consulting, and advisory. Here's the psychological edge. Money creates anxiety. Regulations create fear. When someone reduces both, they become indispensable. That's an unfair advantage. 5. Insurance agencies. Insurance isn't sexy, but it's legally required in many areas. Car insurance, home insurance, business insurance. The global insurance market is worth trillions. Here's how the math works. An insurance agent earns commissions annually as long as clients renew. So if you build a book of 1,000 clients generating $300 in annual commissions each, that's $300,000 a year in recurring income. And here's what most people don't realize. Retention rates in insurance can exceed 85%. That means predictable renewal revenue year after year. It's like building a subscription model, but with regulation backing it. 6. Commercial cleaning companies. Office buildings, hospitals, schools, warehouses, they all need cleaning. And here's the thing. Nobody brags about owning a cleaning company at dinner parties. But commercial cleaning contracts are often long-term and recurring. Let's say you land 20 contracts at $2,000 per month. That's $40,000 monthly, nearly $500,000 annually. Low overhead, scalable workforce, high demand. And during COVID, cleaning demand increased. Boring doesn't mean vulnerable. Now, why don't more people pursue these businesses? Because they don't trigger dopamine. Humans are wired for excitement. We chase innovation. We want the story. But wealth is usually built in silence. Here's what most people don't realize. Exciting businesses often have uncertain revenue. Boring businesses solve recurring, unavoidable problems. That difference is everything. It's like dating someone flashy but unstable versus someone consistent and dependable. One gives you adrenaline, the other builds a life. If you invest in a flashy startup that might 10x, that sounds amazing. But if it fails, and most do, you're at zero. Meanwhile, a boring business generating $300,000 a year growing at 5% annually for 20 years, that compounds into millions. Even investing in public companies in these sectors historically provides steady dividend growth. Consistency, greater than hype. Actionable steps you can use. So what do you actually do with this? Step 1. Shift your filter. Instead of asking, "Is this exciting?" ask, "Is this recurring?" Step 2. Look for regulation. Industries protected by licenses, permits, or contracts are harder to disrupt. Step 3. Follow human behavior. People will always create waste, accumulate stuff, fear pests, owe taxes, need insurance, require cleaning. Step 4. Start small. You don't need millions. You can buy into franchises, invest through public stocks, or partner locally, or even acquire small businesses through SBA financing. According to the SBA, many small business acquisitions require as little as 10% down. That means a $500,000 business might require $50,000 up front, not millions. Now, you might be thinking, but Wesley, I don't want to run a trash company. You don't have to. You can invest. You can partner. You can buy shares. The point isn't to fall in love with garbage, it's to understand the principle. Unavoidable problems create durable wealth. This is where it gets really interesting. When you stop chasing what's flashy, you free yourself from emotional investing. You stop reacting, you start compounding. And compounding, whether in business or investing, is the real unfair advantage. Because time rewards consistency more than brilliance. Look, most people will spend the next decade chasing trends, crypto cycles, AI waves, next big opportunities, and a few will win. But the quiet majority who build wealth, they'll own boring businesses with predictable cash flow and unfair structural advantages. If this video helped you rethink how wealth is actually built, hit the subscribe button. I post weekly videos breaking down wealth building, investing psychology, and practical financial strategies that actually work. And comment below, which of these boring businesses surprised you the most? Because once you understand that boring can be powerful, you stop chasing noise and start building something that lasts.